Hey guys, Helen from Insight Finance Solutions here. Just dropping you a video to give you an update regarding the announcements that we've heard recently for the additional support that's been offered by the government. So as earlier in the year, we've had the big announcement by the Chancellor, and we're now starting to see more of the detail come out to us. So I just wanted to let you know what we know so far, what we're still waiting to hear back from or further information from. So the big announcements were that the furlough scheme is going to end at the 31st of October as originally planned. That is going to be replaced by the job support scheme. The job support scheme is going to run from the 1st of November for 6 months, and it's going to be targeted to for viable jobs. So what we mean by viable jobs, to give you a really easy example, is let's take businesses in the tourism or hospitality industry that are open, they are trading, but they may not be trading at their full capacity. So their workforce, they may not be needing them on the full-time hours that they have been employed on, and they have been using the flexible furlough scheme. But at the same time, those jobs are, they do want to retain them. Those jobs are there, and they are looking to have a future once businesses can start trading. What we're looking for, the people that aren't going to be able to utilise the job support scheme are, for example, businesses like nightclubs who haven't been able to open, aren't looking to be able to open anytime soon. And unfortunately, that's where we're going to likely see a lot of redundancies over the next few months as the furlough scheme ends. So to be eligible for the job support scheme, an employee must work 33% of their hours. Of the remaining 67%, the employer is going to cover 33% of that, and the government is going to cover 33% of that. Now, this is where people are getting a little bit stuck and getting their head around this, okay? Because of that 67%, we're breaking that 67% down into 3/3. So a third of 67% is actually 22%. So what we're not getting is a situation where an employee is going to work 33% of their hours and get a full wage. What we're looking at is we're getting 33% of their hours, and then the employer is going to pay cover a third of that top up, so that's actually 22%, and the government is going to pay 22% top up. So we're going to get an employee working 33% of their hours as a minimum and get 77% of their wages. Like I say, it's a bit tricky to get your head around it. If you've got any questions, then drop me a message and I'm more than happy to talk you through it in more detail. What we are going to see is we're talking about just wages costs here. So an employer is going to, of that analogy of that minimum of 33% and 77%, an employer is going to cover 55%. The government is going to cover the 22%. So we're looking at a reduction in the government's contribution from the 80, 70, 60% that we've had under the furlough scheme to a 22% contribution. And we're just talking about wages here. An employer is expected to cover national insurance and pension contributions. In order to be eligible, again, an employee needs to be registered on PAYE as at the 23rd of September, and the payouts are going to be paid monthly. So the other thing that we've heard is that the self-employed income support scheme is also going to be extended in alignment with the job support scheme. So we're going to see 2 further grants. We're going to see a grant covering the period the 1st of November to the 31st of January, and a final grant covering the period from the 1st of February to the 30th of April. So again, the percentage that it's all going to be calculated on exactly the same periods, average monthly profits, all of that. So I'm not going to go into detail on how all of that is calculated. We know that the 20% is going to be applicable for that first grant to a cap of £1,875, and then the second grant we don't have the detail yet on what that's going to look like. They're keeping that open so that they can be flexible and adapt it to the times when we kind of get to that time. What the 2 key parts of this is that in order to be eligible for the grants, the business needs to be actively trading, and it needs to be experiencing reduced demand due to coronavirus. This is one of those areas that we're still waiting for more detailed information on around those definitions. But what we are seeing, again, like the job support scheme, that we're targeting businesses here that are viable. So if your business is open and it is trading, but it is still not trading at full capacity, you're still being adversely affected, then you are likely to be eligible for these grants because you are still trading. Unfortunately, if your business hasn't traded and isn't trading and doesn't look to be trading in the future, then potentially you're not going to be eligible for this, because for these two future grants, because of that actively trading part of the criteria. Again, we are still waiting for some more information around this, a bit more clarity, but if you do have any questions, then just drop me a message and I will update you as soon as we have any more information. The other things that we've seen in terms of VAT, we've seen for hospitality and tourism, the VAT rate was reduced at the 15th of July. And it was reduced from 20% to 5%. That was due to go back up to 20% in the middle of January, but that has now been extended. That reduction has been extended to the 31st of March 2021. So that's great news for those businesses. Again, still keeping on the topic of VAT, the deferment. So earlier in the year, any VAT that was due for periods between the 31st of March and the 30th of June, you had the option to defer the liability, the amount that was due to HMRC, up until the 31st of March 2021. So what the government have done is they understand that this means that we could potentially have one lump sum payment, which will be a bit tricky for some businesses to pay at the moment given the current circumstances. So what they're offering is a 12-month payment plan so that you can pay that liability in equal instalments up until the 31st of March 2022. So that option is there. If you want to utilise it, you can still pay it in one lump sum, you can still pay it earlier. It's entirely up to you, but that will give a little bit of comfort and relief to those people who were worrying about settling that amount by them. We've also seen a similar thing for self-assessment. So for those people who are self-employed and normally make a July payment on account, that was also deferred to the 31st of January 2021. That means that people potentially could have a larger than normal tax payment due at the 31st of January 21, because they've got that payment on account, their balancing payment, and also their first payment on account due for their 2021 tax year. So again, HMRC understand that this could be quite tricky for people, so they are allowing a 12-month payment plan to be set up. You can do that online through your personal tax account. You don't need to ring them for anything for liabilities up to £30,000. Anything more than that, then you will need to ring them. But otherwise, you can do that just in 5 minutes on your personal tax account. So that option is there to help people out as well. The other thing that we've seen is in terms of the loans that have been offered by the government. We have seen an extension to the application. Particularly the coronavirus business interruption loan scheme, the deadline for applications for that was the 30th of September. That has now been extended to the 30th of November, in the same way for the other loans, the bounce back loans and the futures loan. They are all there. The extension is there for all of them to the 30th of November. In addition to that, when the loans are going to become due for repayment, there is going to be some flexibility around how that gets to look. So there will be the options there to do interest only payments. There is also the option to extend payment terms up to 10 years rather than over 6 years. The government is offering their guarantee on the coronavirus business interruption loan schemes extension. So there's going to be a whole heap of flexibility around how those repayments get to look, which again we'll hear more about next year as those loans start to become due. So I think I've covered everything, guys. Any questions, obviously give me a shout. I know there was a lot to take in there. I'm here. Drop me a message and I'm more than happy to go through it with you in more detail. Have a great day. Speak to you soon. Take care.